From the Dugascopy TV studio in Geneva, we are back with technical analysis and independent technical analyst Bruno Estier. Welcome to the studio, Mr. Estier.
Good morning, Daniel.
2 weeks ago, you were worried about the declining equity markets, and it really happens. The equity markets lost sharply last week. So what is likely to happen now? Where are we now?
Well, as we see here, we had a very sharp decline, which reached almost the October 2014 low, around 1820, with a spike at 1867. And really, the question is, are we going to see V-shaped rebounds like in the past, or something else? And for that, we have history which helps us a little bit. The answer is no, it's not going to be a V-shaped rebound. We take, for example, the big fall of the crash of 1987. It was such a big fall that it took a long time to repair. That's why it was a trading range with no retest of the spike low, but a long trading range which took many months. If we take another case during the bull market in 1998, for example, we had a retest of the low about a month later, and then a new bull market started. And something which is closer to us now is the low of 2011, which was during a long sideways period, already since 2000 for the equity market. And we had, after the first spike down, a marginal new low. So really what we should expect is one of these three cases.
Does this mean the 2015 case also resembles one of these patterns? What is your perspective?
Yes, I think we need to put in perspective where we are. Where we are is basically we had an uptrend since October 2011 with a rising support trend line which was not broken until the event of August 2 weeks ago. And that means that the previous low, as we said in October 2014 at 1820, is an important level. But also, when we measure from the bottom of October 2011 to the top of 2015, we notice that a 38% retracement, a third, is coming close to 1720, 1740. So that means that if we have a retest of the low or marginal new low, it could go to this area of 1770.
Does this mean that this is the reason why the S&P also declined yesterday?
Well, we see that the movement after the first spike is a rebound, a reflex rally, as it is called. And unfortunately, the momentum on the stochastics and the MACD is still sharply down. So that means that every time that the market stopped at a resistance, when it starts to go down, it can accelerate sharply. And that's exactly what happened yesterday with a more than 20 points decline.
So if we look at another market, the Euro stocks, how is the situation look like here?
Well, it's not so rosy. It's, we noticed similarly to the S&P that the previous low was also in October, around 2790. And then most likely the spike at 2770 is going to be retested or with a marginal new low toward these 2790 levels. So the momentum is still down, so here we expect the same thing, and the relative strength is about flat, so it should not be better than the S&P.
Let's switch our perspective to Japan. How does the Nikkei look like?
Well, the Nikkei was a great market. Remember, the relative strength versus the S&P was rising, and we had this trend support, which was tested 2 weeks ago and then now broken. So that means that it's not going to be better than the S&P. It's going to probably be a bit worse than the S&P. Fortunately, some of the previous consolidation is around 16,600. We made a low around 70,700. So probably it can go to this area of 16,600 to 15,000 in the worst case. But for now, the momentum is clearly down.
So let's look to India. You always liked India. How is the situation?
India was a great market with a rising relative strength versus emerging market and versus the S&P. Now here we have a huge spike down. Here we need to understand that this is probably a bit specific to the ETF, which is probably a small market for that was present during these panic days, and probably there was some illiquidity in this market. So it's not very clear if the price low is going to be revisited, but certainly it's going to decline around 23 from the level of 25, so another 10% clearly.
So also let's look to China. It has been seen as one of the reasons for the current decline in equity markets, but what's the situation like now?
That's true. In fact, at least in the financial charts, what we see is that there was already since May a decline. And one can say that the financial charts were warning that there was bad things coming in the China economy. We already rejoined the previous low before the big acceleration on the parabolic way up. And therefore, from the level of 32, we can expect to see the area of 30 during the coming retest of the low, or if you wish, a marginal new low, because the relative strength is still declining. So no good news.
Okay, so is there any other market that we have to look at right now in this situation?
I think if there is a market that we should look at is the oil market. As we noticed in the very daily charts here, during the rebound in the last week, we had 3 days up, and this corresponded exactly to the 3 days up on the S&P 500. And 1 day down corresponded to yesterday's decline. So it's probably good when you look at equities also to look at what's happening in the oil market at the same time.
So altogether, what can we conclude? It's a very volatile market right now?
It remains a volatile market because, as you remember, we saw that the VIX was above 20%. It's around 30% area. So it means that swings from one close to the next can be much more than 20 points, and that's the risk, and investors should be aware of that.
Thank you very much, Mr. Estier, for being
welcome.
here today. And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a good day and all the best.